Welcome to Financial Freedom for All, where we help you master your money and live your dream one episode at a time. And today we'll be talking about the new taxation rules, and I'm really pleased and honoured to have a guest here today called Louis Rowley from the ARC Alliance. Welcome.
Good to be here, Steve.
Okay, Louis, so tell us a little bit about your background and yourself so that the viewers can kind of get to know you a little bit.
Yeah, so on a personal level, before I became a tax advisor and accountant, I was a professional footballer.
Wow.
Started from, as pretty much as early as I could walk. I grew up playing for Walsall and signed for Man United when I was 15.
Mm-hmm.
For 4 years in Manchester, followed by a year at Leicester City. In Manchester, that was the back end of the Ferguson era, which was a renowned era at United. Came away from football at the age of 21 and made a transition into professional services. Always had a bit of an academic brain and an eagerness to work with people and have that discipline and determination to, I guess, graft. And so, I took some time to think where my strengths would best lie. And in the tax and accountancy space seemed like a good idea at the time for me to jump into. So yeah, that was 10 years ago now in the sector. And there's been a bit of a journey.
Well, you've seen a lot of change, I would imagine.
Yeah.
What are some of those key changes that you've seen in that 10 years that have impacted self-employed people?
I think in line with the economy and the government's approach to try and, I guess, from their side, generate income, there's been a lot of increase in taxes, increase in the digitalisation of taxes across the board, increased visibility, reporting, and certain demographics definitely targeted in that time, where I'm probably sure, Steve, that you yourself as a self-employed individual have seen felt the effect of some of those tax increases. Yeah. And so certainly it's increased, it's become more rigorous. And I think certainly our journey as a business, we've used that to partner with people to help. It's more than ever, it's important that they take action and proactively plan their lives and their businesses.
Yeah. I've certainly targeted people who own a lot of properties.
Yeah.
That'd be one area. I presume you were alluding to that.
Yes, landlords in particular.
Yeah.
And small business owners on increased corporation tax rates over the last couple of years.
Yeah.
Obviously, going back further, increased VAT rates, dividend rates, reduced dividends allowance. So just off the top of my head, these year on year, it's been
reminds me of that funny story where a judge is speaking to a bank robber and says to the bank robber, "Why do you rob banks?" And the bank robber said, "Because that's where the money is." And that's effectively what the Inland Revenue have done. Well, where's the money? Yeah, we need money to run the country. We're targeting those people because that's where the money is.
Exactly that. Yeah. There's good examples of other around the world of other governments trying different ways to generate the income, and that's just to bring more money and investment in by reducing the taxes, which is, I guess that's on a personal note, a popular view of mine. But with the increased taxes, I guess it does it keeps us busy, and it does mean actually people, business owners, high net individuals, they benefit more from being proactive as well, because there's more to be saved. So it's a double-edged sword, for sure. But I think your analogy's pretty accurate.
Well, there's been a lot of discussion around the new tax rules that are coming out for self-employed people in particular, which includes landlords, right?
Yep.
Let's talk a little bit about that. So let's start off with what are the new rules?
Okay, so it was in the pipeline for a couple of years with the revenue, and it's come into effect since the start of the new tax year from the 6th of April. Those changes are making tax digital for self-assessment and income tax. those affected are self-employed
Yeah.
individuals. That doesn't include partnerships and landlords. And those who are affected this tax year, those individuals and landlords who have a total income, and that's revenue, not taxable profits.
Yeah.
Total revenue combined in excess of £50,000 will be affected from this year.
And let's say I'm a self-employed
Yeah.
individual, and all my income streams added together come to £50,001, is it, or is it 50,000?
Over 50, yeah, over the threshold. Over 50,000.
So £50,001. What do I have to do?
So first thing is to register with HMRC that you meet the criteria, and then the first important date for anybody to note is the 7th of August this year. So 7th of August 2026.
Yeah.
First quarterly Making Tax digital submission will be due, and that is purely based on financial records from the first quarter ending the 30th of June. So the key thing, and that theme carries on throughout the year, where probably to go back a step, is that anybody affected that would have been used to making one submission a year to HMRC are now making, in addition to their tax return, 4 quarterly Making Tax digital submissions.
Right.
So they'll be making 5 submissions to the revenue through the year now. And that has to be done through digital records, through the relevant software that is approved by HMRC, and submitted on time. So it's quite an increase for people who are used to dealing with their taxes once a year.
Yeah.
To now 5 times a year is...
Yeah. Especially those of us that don't like administration.
And
Paperwork.
and I'm sure you can attest that people are better off focusing on what they're good at. And usually if they're running their own businesses, they're better focusing on driving the growth of their own business, not dealing with administrative work or accounts, finances, compliance in the background. So the danger for people is also spending more time on this HMRC compliance, that they're actually spending less time growing their income.
Right. Yeah.
Which is, I guess, a hidden cost in that regard for those affected. Yeah.
I'm a firm believer that with any challenge, with any problem, if you look deep enough, there's an opportunity in there somewhere.
Yeah.
What are the opportunities for self-employed people to kind of go, okay, what's positive about this? How's it going to help my business by having this new structure in place?
So effectively, HMRC, with insisting on these real-time information on digital records being submitted quarterly, now gives people up-to-date visibility over their finances in real time. So if they partner with a proactive advisor, they're able to use this information to effectively leverage that to add value, provide, look at how they can minimize their tax exposure. With that, increase their wealth, retain more money to themselves and pay less over to HMRC. And with that money being retained, use that again for growth. So that insight into their own business, their self-employed business or the rental incomes, that can be harnessed to add some real value. And that's the message we're certainly given to the discussions that we're having. I mean, you and I have had this discussion separately for yourself, and you've actually found it caused you restructured your business as a result in your structure, didn't you?
I did, and one of the things I liked that you pointed out is that I should be paying less tax. And that was, that's just music to my ears, isn't it? So,
and that's only the start of the conversation for anybody, because that then provides opportunities to do more with tax savings. I always say to clients, if you think, it's almost as if people accept the tax for what it is, whereas if you see tax as an expense in your business that you can do something about, if you saw it in a standard profit and loss, just in there between travel costs and insurances and telephone costs, and saw the size of it in comparison, I think people would be far more proactive and look around for support on how they could reduce that. Because ultimately, as that number goes down, the profits left over for you to retain and either reinvest, maybe have a bit of fun with, or whatever you choose to do. That number goes up, that's the aim of the game essentially.
Very good. So, should people be worried at all about these new rules?
No, to be blunt. There's a lot of new information and key dates where I think it's causing concern and causing an element of anxiety and worry amongst self-employed individuals. But the software already exists and has done for some time that helps streamline managing their finances. There's plenty of advisors out there like ourselves who work with individuals of similar sizes and bigger businesses with experience of really minimizing that time admin cost. They need to speak to the right people, understand clearly on what's changed and what isn't. One of the biggest questions is, am I now paying tax quarterly? No, you are just submitting certain information to HMRC quarterly. But partner with the right people, allow them to take that compliance and admin burden from you so that you keep focusing, as I said, keep it simple, keep focusing on what you're good at, stay in that lane. And that's how good businesses function anyways. Good teams function by people playing to their strengths. Yeah. Maybe not playing Declan Rice at right back. But and continue, and that's how people continue to grow businesses and build wealth ultimately.
There's a lot of misconception out there, isn't there? So, for instance, you put me right on something earlier where you said we don't have to pay the tax quarterly.
Yep.
Because that's the perception I've got.
Yep.
We just have to submit the forms quarterly, and then when we normally sending our tax return, that's when we send the whole the money.
Exactly. For me, that highlights the need for that partnering with the right advisor.
Yeah, definitely.
And it's quite poignant us having this conversation because we've recently started working together. Yeah. Maybe I'd ask you the question: do you feel, and how has that changed the way you view your business now, having an advisor where you, I dare say, feel as questions arise, investment decisions, business opportunities, you now feel in real time, you can have that conversation. And what is the difference from your side between not having that and having that? Difference on your concerns about tax, the confusion or lack of awareness as to how that impacts you.
Oh, for sure. And initially I'm like probably most people, banging the table saying, what the heck are these people doing to us? But actually what it's done is it's made me think differently from someone who traditionally has a shoebox full of receipts, kind of rings my bookkeeper or accountant with a month to go, saying, right, I'm going to send it through, and they got to sort all that out. And then I kind of evolved a little bit after doing that, thinking, do you know what, I'll put it all into a spreadsheet. And that used to take hours to do all of that. So now with modern technology, having to get the form submitted within 3 months, it's going to be the amount of work I used to do divided by 4 is going to be a lot more palatable and therefore a lot more sensible. And then onto your point, as I plan forward to next April, I can see what my profits are going to be without having to wait, which gives me more confidence to make better business decisions going forward.
Then on that note, what do you expect from your accountant stroke tax advisors now versus perhaps the way you saw them over the last few years? Has that shifted what you expect from them and what you need from them?
That's a good question, because now the planning can be done, which really was never done before. So now, because you can see the landscape building towards you and in front of you, now we can have conversations, in that last kind of quarter or two to say, hey, it looks like I'm going to have this amount of a tax liability. What can I do? So the planning side is naturally taking place. And
there's more onus on someone like us to be ready to add value, and
absolutely,
rather than react to simply dealing with necessary filings.
That's it. And scrambling, to get it all done.
Well, that's the thing. It removes that concern. You've got clarity on what you're paying and when.
Yeah.
But then clarity or confidence, you're maximising the opportunities to minimise what you pay. Less worry, more savings, and then we talk about really going from good to great on financial planning and building wealth. That's where those doors really, surely that's where they open.
It does, and it creates less. It's part of, we all have to handle stress from time to time, and this can be stressful once a year historically. But actually now, I think as we get into the rhythms of doing it, I actually think it's going to de-stress a lot of people.
Yeah,
certainly has done already for myself.
You say it creates almost a positive energy towards it, because you see there's opportunity.
Yeah,
that in the same way, building a business, adding to the income that you're generating as a business. If you're reducing an expense, the bottom line, it has the same effect.
It does.
You have more take-home pay.
Yeah.
So it is, in economical terms, it's as if you're growing your business and winning more work, which people should be energized about. Okay,
so Louis, what you're saying is organizing your finances, gives you a better lifestyle, gives you a better organized, better life, right?
Definitely. I think with the organisation comes a few things. There's clarity in thinking. You have a clear indication of actually what you are earning, what you're spending. It's timeliness, because having that information in real time means you have not only the clarity of vision and foresight, but also you have accurate information, and therefore you can rather make reactive decisions for yourself and your business. You can proactively make them. And generally, certainly when it comes to tax planning, I mean, I'll probably touch on, you're better placed on the wealth planning side of things, but most tax planning options, the better ones, are available before somebody gets to the end of their financial year rather than afterwards.
That's right.
So there's better options on the table. It's less, there's proactiveness and foresight in making them, and a real clarity in thinking and conversation. And that it's always going to reduce stress of anybody in that situation.
It does. There's a phrase which comes to mind, which is great planning from a financial point of view gives you more choices.
Yes.
100%. So when you think about it, most people think about their holiday, where they're going every year.
Yeah.
They're probably having a holiday right now, but December, January times when they start thinking about where they're going to go on holiday. So that coincides with the financial planning, really, doesn't it, for the financial year, which is due in the April.
Yep.
So if you can save me, let's say, £5,000 in taxes, that's either a £5,000 holiday or a £5,000 better holiday that I can have. I take my sons away quite often, and I can imagine them watching this going, "Go, Dad."
Yeah, exactly. They've just they're probably Googling already the hotel upgrades for next year's summer holiday.
That's exactly right. Yeah.
Yeah. You are bang on though. That's the point. I think it raises a really good point that if somebody receives from a professional, an accountant, a long worded letter, an email full of jargon that they don't quite understand, maybe some of those opportunities and benefits are lost in translation, whereas you've just put it in wonderful layman's terms that resonate with you, and it's quite clear actually what you stand to save, how you stand to benefit, and how that most importantly impacts your life. And that's I think the key thing. And again, I enjoy these conversations speaking with somebody working in financial services, because our roles often overlap, and
they do.
I imagine it's the same in those conversations around financial planning, that you need to partner with somebody that knows how to relay this information in a language you understand. That clarity comes not only from clarity on the numbers, but being presented in a way that really comes alongside you as an individual. So you can use that to book better holidays.
There you go. Need to work hand in hand with a travel agent now.
Yeah, exactly.
Yeah. Okay, so what does a financially organized business look like, would you say? Talk us through that. If you're speaking to someone who's listening now that has their business, what layers would you add to them to make it look better?
I think it's always starting with taking a step back and educate. It starts with education, that the business owner understands what building blocks they want to put in place and when. And I'll often have people approach us, inquire of our services, and they're talking about lofty plans that maybe 2, 3, 4 years down the line. There's certain disciplines or foundational pieces that aren't in place. They'll never reach that goal if they don't get some of these bread and butter practices in place.
Yeah.
So it's incredibly boring and laborious, and nobody wants to talk about it, and rightly so. It's just a necessary evil that once it's done, it hopefully ticks away in the background. But having really robust, up-to-date and accurate financial records is probably a really good start to running any business.
Yeah.
You know where you're at on a live basis. And from that is the springboard to then say, depending on what you're trying to achieve, whether it is growing, an established business with infrastructure and growth, or, wanting to be a self-employed individual that balances that time between earnings and lifestyle and freedom, is from that bedrock, that foundation, the springboard is right. How do I go from here to here, and what steps do I take? How do I plan my taxes? How do I finance things? How do I build my personal life alongside this? The big part is having that foundation in place, having the plan, and then understanding the people you need around you in terms of advisors in order to do that. You've been in self-employed for how long, Steve?
39 years.
And I dare say that the support that you used to have from bank managers, local networks, the Chamber of Commerce, then is drastically different from how you function now as a business. It's probably quite a lonesome place when it comes to professional advice.
Compared to what it used to be, yeah.
Yeah. And so the need to build your own panel or team around you that understands the short, medium, long-term plan.
And what it does is it gives you a better feeling of being in control.
Yeah.
And then I think more importantly, if someone's looking to scale up and explode the revenue and obviously the profitability, it's far better, I think, to have a controlled explosion than one that's just,
they're often
random.
Even in periods of high growth, it's the same principles that you want to maintain from when you're starting up.
Yeah.
Clarity, proactiveness.
Yeah.
Making informed decisions rather than reactive, finger in the air decisions. I imagine it's the same with financial planning. It's always, trying to be as informed as possible, and making them is the best way if you are going to explode with growth. Having that team around you, so that as I keep saying, focus on what you're good at, focus on the growth, focus on driving something forward, knowing you've got the infrastructure and the team around you that will deal with the taxes, integrate it into your personal life in the best way, and help build your wealth at the same time. And protection, it's a huge piece that nobody seems to talk about, is people spend so much time working on, I know we're probably digressing here, but people spend so much time building their businesses. They invest 8 to 10 hours a day and yet have little to no knowledge or investment in how they actually protect everything that they're building. You probably see that more than I do.
Oh, yeah. Business people don't tend to think about the worst case scenario because they're entrepreneurial. They're very positive. And they're very, but things like getting seriously ill or even passing away doesn't cross their mind because they just don't see that ever happening. Yeah,
I bet you've probably seen some difficult cases where not having that protection in place.
Yeah, there's one famous one of two brothers that owned the largest coffee stall, if you like, that was on all the train station platforms, and one of the brothers passed away, and the wife of the person who passed away then naturally became board member because she inherited the shares, 50% of the company. Yeah. Now, we all get on and don't get on with people, but this particular story follows the path that you're all thinking right now, those that are listening, is that this widow did not get on with the brother-in-law and wanted her money out of the company. quite rightly, I suppose.
Yeah.
That's her right. They argued about that for years. Lawyers got paid handsomely because of that argument, and that company ended up going into administration.
If they were to just have the right insurance and protection in place,
yeah,
you know how much
yeah,
they would have cost them?
Yeah, according to the article, if they'd have put in a life insurance policy in place to cover the value of those shares, to pay the wife, the widow, I think 5 million, 10 million pounds, whatever it was, at that time it would have cost around £100 a month to pay for that.
It's wild, isn't it?
It's incredible.
That's the thing of just people that are self-employed don't need to know the detail in and around that, but they need to have confidence that they've got somebody in their corner who does and will bring, whether it's the tax, the protection, the wealth planning, the investment, bring these things to the table at the time on the journey that they're going on with them.
Right. So what conversations do you think should family businesses, where you've got the husband or the wife that's running the business and the other spouse is not, or you've got both of them entwined in running the business, what conversations should be going on at the family dinner table, about how they should plan their business better?
Well, I think a couple of things. I think first of all, I'd challenge. I think it should happen at the family dinner table, but then there should be a need for them potentially to have the conversation also around, a professional table, because there's sometimes the freedom knowing an independent person's in the room that other questions might be asked, or they may hear something that prompts an idea, a thought. So I think in those conversations, again, it's the same principles. I think they should be talking short, medium, long term. What do we want to achieve in the short term as a family? What do we achieve in the medium and the long? And in that journey, what are the risks? Whether it's if the business is growing, we could all spend more time growing our businesses. For example, I've got a young family. The risk would be I'd miss time with my children, and there's practical conversations. But if we need more income to cover bills, for example, that something has to give. So I think there's practical ones. There's then the professional ones in and around planning. Who are we going to have that with? Does the person that we're relying on, that professional, understand our personal dynamic? And I would say that's one of the biggest, certainly in the way that we've adopted our business and grown it, is really understanding when we're with a client who runs a business. You are not engaged just to look after the business. You have to understand the individual and their personal lives, because the relationship between especially small businesses is pretty seamless between individual and the business. And so that may change your advice. That may change what's right for one client, may not be right for the next, depending on their personal needs. So I think an individual, they need to be confident that there's somebody in their corner that really understands that and wants to get a good steer on, the dynamic between a husband and wife and the children, the plans, and how they best advise them in and around that. For example, it's not just about tax planning and wealth planning, but when you talk about children and family businesses, there could be succession planning and how that business passes down, and what point do we integrate the children into that conversation, and how do we structure it from the big ones, their future spouses that come into the family, and how do we kind of constantly protect what we're building, clarity over it. And so it's quite a wide question, but it's really, I think it's important to have it at the right time in the right place, but with the right people. Because oftentimes I think as advisors, our job is to try and shed light on what necessarily isn't general knowledge, and shed light on questions that aren't being asked, just for those prompts that people have written. It comes back to having confidence that they are planning things the right way for them, not necessarily from the textbook. So if we have somebody listening right now who is sitting there thinking, oh Lord, I've been in business for a while now and I just haven't got my my finances in order from an accountancy, bookkeeping and taxation point of view, what's the first step that they should take? I think I would encourage them to seek out having that first conversation with finding an advisor that they have confidence in.
Right.
And it's not confidence in filing tax returns and self-assessments to HMRC, because I think it's harder to find an accountant that doesn't do that. It's kind of what I just touched on around the family table. Confidence that they understand, the advisor understands you as a business, you as an individual, and can help you along the way to minimize your tax exposure, maximize your growth, your wealth, and tailor that to your needs, and challenge you at times. I dare say some of your, the best clients that you've worked with over the years are ones that you've had to push back on and question their decisions.
Yeah.
Maybe why they're making them, or if they're even feasible.
Yeah.
And I think sometimes that as an advisor's job is not to nod the head and go along with something that.
Well, I would say almost every time.
Yeah.
You're in that situation where someone says, this is the direction I'm going, and we have to skillfully kind of say, well, I can understand why you would want to go in that direction, but I think you ought to really consider maybe this direction's actually going to be a bit better for you, and these are the reasons why.
Yeah.
I'd say 90+% of the time.
So that's the best way that you build trust with, if you're as an advisor, that's the best way you build trust. But
yeah,
that's a really good soundboard for an individual. They can rely on the advice they're receiving.
Yeah.
It's somebody that will say no or challenge them.
Yeah, I think so, because that's what building a relationship's like, isn't it? So, it's not just being a yes person and, from a business point of view, just taking an order.
Yeah.
It's actually making sure that what people put in place is the right thing, not only for now, but for the future. And just making sure they understand that, that they've got choices, but there are also consequences on different types of choices.
Yeah.
Yeah.
Yeah. And I guess people have different appetites for being exposed to those risks and consequences. And
that's right.
That awareness is so important.
It is, yeah. So, you've obviously in your 10 years met with many self-employed people. What are the biggest mistakes that they make?
I would say there's a saying that financial advisor I've actually worked with over the years said it's not what you know that's the problem, it's what you don't know as an owner, as an investor, as a self-employed person. And so again, that it comes back to partnering with the right people. Even in business, it's not just about professional advisors. Some of your business networks, the people that actually mentor you in business, people you share ideas with, people who are constantly maybe sharing information that you didn't know existed, or different ways of doing things, different ways of growth, challenging, dealing with different challenging staff members. And so I think having always that fresh perspective is probably the business owners I've met that struggle the most, don't want to take on necessarily that new advice. And they think they know enough in order to be able to make right decisions. And so therefore, that ties up with what I'd said of really play to your strengths, know your strengths, stick to them, and where your weaknesses are, that's where you want to get the key people around you.
Yes, like as you say, it's building a dream team, building a team of people that that helps you achieve your goals and dreams. And with that team of people, you're getting a lot more insight, a lot more wisdom, as opposed to trying to be, wearing a hat for every single role. Jack of all trades.
Yeah. When it's, I'd say the analogy of a dentist. They are good at, I'm not going to walk into a dentist clinic and, upon a consultation, try and tell them what they need to do to my teeth and how. We know it's not our lane, and we kind of sit back and let them lead as the expert. And that it's the same business owners, they've got those skill sets. And usually that entrepreneurial appetite and spirit is a powerful thing and should be leaned into, but we all have our weaknesses. And you need a team for that, not just a tax advisor, but I often find a lot of the work that we try and execute, you need a wealth planner, a financial planner alongside you, and it stems into law or growth, marketing, strategy. And before you know it, when you partner with the right team, you do end up with that panel, that team, which builds that confidence to grow.
Brilliant. Okay, well, I think it's worth pointing out to the people that are listening that you don't have to do everything today. You just need to start with the first step. And as you said, the first step is to find someone, in my opinion, I think that comes recommended.
Yeah.
Because then yeah,
that's a good point.
Yeah, if they come recommended from someone who's using someone, then that usually tells you that they're pretty good. And just get that connection, build the trust and the friendship and relationship, and then take the first steps in getting your finances sorted out. Because as soon as it's easy once you've got started for the momentum to keep going.
Just about to use that word, momentum. It creates that positive energy that we spoke about, that actually there's a lot of, you stand to benefit more than you stand to lose when you step into proactive planning with the right people. And that should create a bit of, it's not a word people often associate with tax and wealth planning, but it does create a bit of excitement that there's a lot to benefit from.
Yeah. So I want to finish on this statement, in that a good life doesn't happen by chance, it happens by choice.
Yeah.
And all of you who are listening here today have a choice. And the choice I'd encourage you to make is to connect with a tax advisor, connect with people who are going to advise you on your business and help you achieve your goals and dreams and have a great life.